Will we be having a huge cryptocurrency crash in 2018? That is exactly what we're discussing here today, guys. I did a similar video on the stock market about a month ago. I did one on the stock market and if the stock market will actually crash in 2018. This video is very similar, but we are taking the entire cryptocurrency market and we are talking about literally the entire cryptocurrency market and if the cryptocurrency market will crash in 2018. And we're going to be looking at several different factors to kind of judge all this, and you guys can make a decision on if you think this is realistic or not. And I would love to hear in that comment section what you guys think based upon all the things I'm going to share with you today here. And we've got a lot to get into with this one. Now, this video is not going to be, is this cryptocurrency better than this cryptocurrency? Is everybody going to be using cryptocurrency 10 years from now? And no one going to be using dollars and yen and all those other things? Like, this video is not dedicated toward that at all. We're just looking at the entire crypto market as an investment class, a new investment class, and will it crash based upon several different factors, guys. So I hope you really enjoy this day. Now, first off, I have no interest in Bitcoin crashing. I have or cryptos in general crashing. I have no interest in cryptocurrencies crashing. I have no interest in cryptocurrencies going up thousands of %. I don't really care. I'm just a watcher right now. I'm very observant of all this. I'm looking at everything that's going around, and we got a lot of people on one side of the fence way over here or one side of the fence way over here. We got a lot of people that are just waiting for cryptos to crash, hoping that cryptos crash, that say, cryptocurrencies as an investment class is worth zero. We've got a lot of people over here away on this side of the fence that say, you guys are crazy. Cryptocurrency class is going to be worth 10 trillion someday. This is going to take over all of fiat money, this and that. So we've got a lot of people on both sides of the fence, very, very passionate here, guys. So I don't have a stake either way. I'm just interested in this whole thing and I'm watching it go on. It's very interesting to me and it's exciting because a lot of people are getting into investing that have never gotten into investing ever before. So the first thing I want to talk about before we talk about anything is, what is a true crash, okay? What do I mean by a true crash? Because we've got so many people that don't even understand what a true crash really means, okay? A lot of people think like, oh, if such and such cryptocurrency goes down 20% in a day or something like that, and then it bounces back in a few weeks, that means it crashed. No, 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 no. A true crash, when we're talking about, could the cryptocurrency class crash, what we're really talking about is we're talking about a negative 50% plus type scenario, okay? And it's staying in that type of scenario for a year or longer, for at least a year or longer, okay? A real crash. That's what a real crash looks like. Like, just because such and such cryptocurrency, you bought it yesterday and it went down 15%, doesn't mean it crashed, okay? We're talking about it went down massively and it's not coming back anytime soon. That's a true crash. When you look at any type of crash in any investment class in the past, that's what you truly mean by a real crash. You're talking about 50% plus, and you're talking about it's down there for a year or longer here, guys. So that's the first thing we kind of got to talk about there. Next thing I want to go into is I want to talk about bubbles in general, and I want to discuss kind of what is a true bubble? Because we get a lot of stuff thrown out there right now about, our crypto's a bubble and this and that. What does it mean to be a bubble? Well, a bubble, what that really means is you got to see prices in that entire investment class going up at a super fast rate, okay? The prices of that investment class, so whether you're talking about the stock market, you got to see, prices going up massively. Whether you're talking about real estate market, you got to talk about prices going up massively. Whether you're talking about the crypto market, and it's not just like there's a one-off, like there's one thing here or one stock there or one particular little community that's doing really good in real estate. It's the entire thing, okay? So does cryptocurrency have that type of situation going on? Yes. Almost every single cryptocurrency out there, it doesn't matter what it is, it doesn't matter what it's about, it doesn't matter, what it has going for it or what investors it has going for it. Almost every single cryptocurrency is up massively in the past year, and it pretty much just keep going up massively, right? So we see the entire crypto market is going up at a very fast rate. Doesn't mean it's necessarily, just because it's going up at a very fast rate that it's for sure a bubble or anything like that. That's just something you have to take into account, okay? Bubbles, what else do bubbles attract, okay? When you look at the real estate market bubble that kind of happened in 2007, right? When you look at the tech bubble that happened in 2000, those are the ones I really like to talk about because those are the two most recent. The tech bubble happened in 2000, it was late 90s all the way until 2000s when it popped. Then 2007 was the real estate market when that popped, okay? So another situation you have is you have a lot of new investors, okay? You got a lot of new investors that have never really invested in anything before, any investment class, that kind of flood in there, which is real estate. We had a lot of that, guys. I mean, I live out here in Las Vegas and I have friends that have lived here a long time. They tell me they had friends that were like strippers and whatnot and had, you know, 5, 6, 7 homes. They told me they had friends that made $40,000 a year and were able to get mortgages for $750,000 house, guys. So a lot of absolute craziness was going on. The tech bubble, it was like anything and everything. Like people were just flooding in there, whether they had ever invested in a stock or not. They were just trying to get their money in as fast as possible and try to get into whatever tech stock because it was like you couldn't miss. Every single tech stock pretty much out there was going up 20% a day, 50% a day, 100% a year plus. So it was like you couldn't miss. So it was attracting a massive amount of new investors to that. Do we have that in cryptocurrencies? Absolutely. The amount of people I know in real life that have gotten into the cryptocurrency market within the past few months is unbelievable to me. And a lot of people that have never seriously invested, a lot of my friends and family that have never seriously invested in anything have gotten into cryptocurrencies. Now, why does this even happen? Why does this even happen? Well, because of the price. When you see all these people making so much money and it's so easy, that's kind of the next point. So easy. When it seems so easy and you can't miss, everybody wants to get in that, especially if you never invested in anything in the past. Like of course you want to get in that because it's going up massively at a massive rate and you're like, wow. The Ripple just went up 20,000% last year. People are looking at that and they're saying, this could literally change my life. If I just had put $1,000 in that, I could be worth so much money now and that would have changed my life dramatically. Like that's the way people are looking at it. So they're looking for whatever's the next cryptocurrency. It doesn't matter what it's about or whatever. They're just looking at it and they're saying, let me put $1,000 in this one over here and hope it goes up that much because it's life-changing when you look at what's going on. So when you see these type of prices rising, it's a super easy money. It just seems too good to be true. And what do humans love more than anything? Easy money. No one really wants to work hard for money. They just want their money to just like magically go up a massive amount and get rich. You know, I live out here in Las Vegas. One of the big attractions, as far as the people that come to gamble in Las Vegas, what are they coming to gamble for? They're coming to gamble because they want to try to make easy money. They want to try to, you know, come out here with $500 and somehow they turn that into 500,000 because they hit a jackpot or something. Like that's the thing that why do so many people play the Powerball, the Mega Millions, things like that? Like people want the easy money. And if it seems easy and you can make it, then maybe, but this is even a bigger case because this is like everybody that's in it's making money. In the situation of a Powerball or Mega Million, most people lose, right? It's just one person or a couple of people end up winning the jackpot and become super rich. This type of scenario right now, what you have going on with cryptos, everybody's making money. You see everybody making money. Everyone that has a friend or a family member who's making money in crypto, what do you think they're doing? They're bragging about, oh man, I just made, you know, I just put 5,000 into this crypto like a month ago and now I already have 18,000 here. And somebody's looking and they're like, you made 13,000 in a month on a little investment like that? How do I get in this? And that's what every single person out there right now is asking, how do I get in this? Because it's too good to be true. It's so easy. It's such easy money. Everybody loves easy money. Let's get in it. So those are kind of things that happen with bubbles, right? And it was the same thing with the tech bubble when that happened. It was the same thing with the real estate bubble. Not saying necessarily cryptos are in a bubble because you can make an argument that maybe cryptos are so new that they're all going to last around, you know, all these ones, whether you're talking about Bitcoin, whether you're talking about Litecoin, whether you're talking about Ethereum, whether you're talking about Ripple, any of these, whether you're talking about Thorn or whatever the new one is, that's all of a sudden like going up like crazy. It just took over another one, right? Or Bcash, Bitcoin Cash or whatever, like whichever one you want to pick, right? They're all going up massively. And so maybe they can all last. Maybe they're all going to make it through and they're all going to become big time and you can make make an argument that right now maybe they are all underpriced. And so the whole bubble tendency is a false narrative right now, and they're actually undervalued and they should all go up a lot more. That's an argument that could be made. Now let's talk about what could actually cause a crash in the cryptocurrency market, okay? The number one thing you kind of got to always look at, whether you're talking about anything crashing, whether you're talking about cryptocurrency market, whether you're talking about the stock market, whether you're talking about the real estate market, whether you're talking about bonds, it doesn't matter what you are particularly talking about, gold, silver, whatever. Generally the thing that would more than likely cause, and you can make an argument that sometimes gold and silver are a little resilient to this, but generally speaking, it's something in the macro economy that happens where it actually affects everybody, okay? Something in the macro economy happens where things start to go down, okay? Just things start to get worse for whatever reason, so people start to lose jobs. When people lose their job or they start getting their hours cut, what ends up happening? Well, they're stuck in a situation where all of a sudden their bills become much more important, okay? So one, a lot of times is people don't have new money. They don't have new money to stick into investments, okay? They don't have new money to stick into investments. So all of a sudden the investment classes, they stop going up because there's not a lot of new money coming in, okay? So something happens in the macroeconomy, people start losing jobs, or people start, you know, getting their hours cut. All of a sudden, a lot less new money starts coming in that market, okay? When less new money comes in, you start having stagnation, okay? Then what happens is you start to have what's called a lot of fear come into the market. And this is true fear. This isn't like, you know, somebody said something on the news and it might go down or whatever. No, this is true fear. When the actual investors in that investment class start to panic. They start to get really scared because all of a sudden they're like, oh my gosh, what if people start selling out? Maybe I should start selling. And a little selling breeds a little more selling. Right now what you have in cryptos is you have what's an upward snowball right now is what's going on here. So there's buyers and it's creating more buyers and it's creating more buyers and everybody sees this going up and they're just jumping on. What you have in an opposite scenario is a fear situation when you just have people sell and then the prices drop and it breeds more fear and more panic and more people start to sell and more people start to sell and more people start to sell. So that is something that goes on. Also, if the macroeconomy goes bad, right? What ends up happening? Well, people end up having to start to go toward savings, okay? Savings, they start going toward their savings. When they start going toward their savings, where's a lot of people that are probably investors in the cryptocurrency market, where's a lot of their savings? In cryptocurrencies, okay? So what will end up happening is they end up starting to need to take out that money, okay? They need to start taking out that money. It's like, think about if your job just went away tomorrow, like what would you do? You'd probably go to your savings right away. And if your savings, a lot of it's in your cryptocurrencies, that's where you're going for. Like that's where you got to go to pay your bills and whatnot. If everything just shut down for me tomorrow, what am I doing? I'm going to be going to my savings, okay? Once my savings, which is like savings accounts actually and whatnot, once that would be depleted, then what do I go to after that? Then I would go to start selling off my stocks and whatnot because I'm like, crap, and now I don't have any more money. Where am I going to get money? I got to start selling stocks if I hadn't found a job or something at that time. So what could majorly take things down is always a macroeconomic type situation where the economy gets weak and all of a sudden things start to get worse. Now, I would say the likelihood that we have a macroeconomic situation that all of a sudden takes down the economy in 2018, I would say that type of scenario would be pretty rare. That would be pretty rare if the economy just crashed in 2018. Why? Because we're actually in a strengthening phase right now. That's one. Two, corporate taxes are being lowered across the board right now, which is going to make companies more profitable and things like that, right? Which they can either add more employees or they can do a lot of different things with that, raise wages if they want to do that, or spend money to expand their businesses. Whatever they want to do with that money is what they want to do. We also have individuals, pretty much across the board, individuals are getting their tax rates cut, right? Starting next year. So generally all these things combined together, you're going to have a strengthening economy more than a weakening economy, okay? So the whole, could there be a macroeconomic event that causes the, cryptos to crash and everything to crash? I would say that's pretty low relative going into 2018. Now, of course, things could come out of anywhere. Things could come out of anywhere and just all of a sudden strike. But I would say pretty low. Now, in situations like The tech bubble, there was no real serious macroeconomic event that happened in the year 1999 to 2000 that all of a sudden like the economy was a disaster or anything. Those years, like the economy was okay, like it wasn't gangbusters, but it wasn't horrible. So when we had the whole tech bubble crash, there was no macroeconomic event there. It's not like when the housing market crashed, there was actually a whole macroeconomic event that happened that caused everything to crash, whether it's stocks, whether it's real estate, it doesn't matter what it was at that time, it pretty much went down. So in the 2000 situation, that did not happen. So just because maybe we have a good macroeconomic environment in 2018, doesn't mean cryptos couldn't still crash here, guys, because it's happened with the tech bubble before where tech stocks ended up getting slammed, even though we were in a decent economy and there was nothing too bad there. So that is definitely something you've got to take into account. Now we have two more things we got to talk about. The next one is who is hurt? If things go and they crash and whatnot, and we have a situation where cryptocurrencies crash and it's a real crash, who would be most affected by this whole situation, right? Who would be most affected? Well, the ones that would be more affected than anybody, unfortunately, the ones that always get screwed worse than everybody is the small investors, okay? The people that maybe have a couple $1,000s to invest and they put it in cryptocurrencies. Those are the ones that also have the biggest upside potential and the biggest downside potential, unfortunately, because they have an opportunity to maybe change their life where they put in a few $1,000s and maybe it grows to 100,000 or 500,000 and their life is completely changed from that day on, right? But at the same time, they have the chance of being hit way worse than anybody. Because when you think about it, let's say, you know, a cryptocurrency crash happens, right? The big investors never get hit nearly as hard. And here's why. A big cryptocurrency investor, let's say their account's at $400 million, right? Their account's at 400 mil. And all of a sudden, let's say, you know, the cryptocurrency market has just a disaster and drops, you know, 75% or something like that, or 80%, and it's just a disaster zone, right? This guy's still worth $100+ million. Like, he's still worth $100+ million. Is he really hurt that bad? Yeah, it would be nicer to have 400 million than 100-something million, right? But at the same time, it's not like his whole life savings is wiped away or something. With a lot of the small investors, they can have their entire life savings, you know, completely gone. And that's the people that always get hurt the worst in any type of economic situation. In every single bubble you ever looked at throughout history, the ones that always got nailed worse than anybody was the small investors, was the small guys on the street. Even if you look at the you know, the real estate bubble and whatnot, what happened there, a lot of the big guys actually got out of that, you know, free. They got out of it free. A lot of them pushed a lot of bad stuff on people. The small people ended up getting hurt worse than anybody, and that's unfortunate, guys. So this is one reason that I hope that when, you know, if something does happen, I hope it's not too dramatic, because the small investors are going to be the ones that are nailed way worse than anyone, unfortunately, in this situation. The last thing I want to discuss here is how painful would this situation be? How painful would this truly be? Well, there's a few things we got to take into account that are much, this is so much bigger than anything I've ever seen, as far as if it goes south, it could hurt more people in a much bigger way than ever before. And here's kind of the reason, okay? So let's think about the tech bubble, okay? Let's think about the tech bubble. Were there a lot of people that hurt in the tech bubble? Absolutely. But the majority of the people that were hurt in the tech bubble were US-based people, okay? They were US-based people that were mainly hurt by this. Cryptocurrencies are worldwide, okay? So this market is so much bigger in terms of what's actually going on as far as how many people are actually getting involved in this, right? Then versus like the tech bubble situation. The tech bubble, and also we got to know there's a different way you value stocks and versus value in cryptocurrencies. Cryptocurrencies are so new, people don't really know how to value them yet. Some people think they're, you know, this cryptocurrency over here might be worth $1 trillion. Some people think it's worth 10 million. Like, there's a lot of different opinions on that, right? Stocks, there's a simple way to understand it because they actually have earnings. Stocks actually have earnings come off of them, net income, revenues, and things like that. And based upon that, you can actually judge what a stock is truly worth. It's not just like speculation where it's like, oh, this should be worth $1 trillion because there's only so many made or something like that. Like, no, this is a way different market, okay? So this situation is worldwide. Also, let's think about like the real estate bubble, right? The real estate bubble wiped out a ton of wealth, especially for, you know, several years it took people to get back. But a lot of that wealth that was wiped out was in homes, okay? It was in homes. And in this situation with homes being a lot of the price being wiped out, right? Homes a lot of times were on loans, okay? So the people, what got the worst brunt of it are the actual banks. Banks ended up taking the biggest hits of anybody in that whole situation, okay? Cryptocurrency situation right now that we have is much, much different because this is actual real money. These are people's savings in there. Are there some people actually, you know, going on credit cards and trying to get loans and whatnot to invest in cryptocurrencies? Yes, that is going on. But the majority of money in cryptocurrencies right now is actual cash money, is real money that people have saved away. Some people's life savings or some people's partial life savings, right, are actually in this. So if the market goes south, and people lose out on a ton of money, what does that mean basically? That means that they lost real money. Not like, oh, I took out a loan on this house for, you know, $500,000. I took out this loan on this house for $500,000 last year, and then all of a sudden the real estate market tanked and I foreclosed on it. Okay, big deal, your credit's hit, or you did a short sell or something, big deal, your credit's hit from that, absolutely. But as far as like your money out of your pocket, unless you made a huge down payment, which a lot of people were not doing in the real estate bubble, right? People were making really small down payments. Some people were putting literally zero money down on their house, right? So what ended up hitting the worst? The banks. The banks got killed by that, which obviously ultimately in the end all comes back to taxpayers, unfortunately. So it's very different. You have a worldwide situation. Cryptocurrencies are worldwide. You have everybody in this market right now, you know, all over the world. And it's something that, you know, you just got to think about this. You got to worry about it. You got to, you know, take into account the risk. Is there a ton of potential reward out there? Absolutely. You see it every single day. This cryptocurrency pops up and, whoa, it just went up 1,000% in the last month, or this and that. Like, you know, they're coming and they're just, you know, there's a next one and it attracts more and more people. But you always got to be aware of the risks going into this. And if everybody thinks like this is just going to go on forever and these are just going to go to infinity prices, and if everybody thinks there's never going to be a real crash where things crash 50% plus and stay down there for at least a year, 2 years, 3 years, like you're not in the real world. I would just say you got to be aware of this. Now, is something going to happen in 2018? We'll just have to see. I would say if you're judging off a macroeconomic event causing something, I would say probably not, just because the macroeconomy is pretty strong right now. Like the macroeconomy is pretty strong, so I would be extremely surprised if the macroeconomy went off the rails and then caused selling in the cryptocurrency market because people need to get their savings and things like that, guys. So you know, but be aware out there. There's a lot of stuff that's going on in cryptocurrencies that you definitely have to be aware of. There's, you know, different pyramid schemes going on. There's also a lot of people that are doing phishing, so they might set up something that's a cryptocurrency app or something, or it says it's like a cryptocurrency brokerage or something, and they're actually phishing for your information. And on the backside, they're working with hackers, and they sell your personal information, social security codes, or you know, codes, and then your name, birth dates, everything that's vital to you. They'll sell it on the black market to hackers and actually make a lot of money from that. And it's unfortunate. A lot of people are getting, you know, phished out there, and so be aware of that. If you're trying to get in something, make sure it's a legit something, guys. And other than that, that kind of covers this video. Make sure you check out my stock market potential crash 2018 video if you want to kind of look at, you know, the ways on what could cause a stock market crash in 2018. Thank you for watching, guys, and have a great day.